Inflation outturn for April 2014 indicates that inflation has continued to decline since the beginning of the year. The annual headline and core inflation declined to 6.7% and 3.4% from 7.1% and 3.7% respectively in March 2014. The continued decline in inflation is mainly attributed to the appreciation of the exchange rate since the beginning of 2013 and the moderation of food prices in 2014. Inflationary pressures are expected to remain relatively moderate in the near term. However, annual core inflation is expected to rise gradually, but remain within the band of 5% plus minus 2 percentage points. Compared with the previous monetary policy statement, the revision in the inflation forecast is minor, and the forecast for the 1 to 2 year horizon remain virtually unchanged. Real GDP growth for 2013-14 is projected at about 5.7% and cuts across all sectors with the exception of the agricultural sector. The industrial sector is expected to register the strongest growth, partly due to the public expenditure on infrastructure. Growth in real economic activity for financial year 2014-15 is forecast to remain relatively strong in the range of 6 to 6.5%, supported by public investment in infrastructure, domestic demand, and the recovery in global economic activity. Furthermore, the agricultural sector, that has shown somewhat weaker performance compared to other sectors, is expected to improve in the remaining part of 2014. Given that the 12-month forecast for annual core inflation is very close to Bank of Uganda's medium target of 5%, a neutral monetary policy stance is warranted. The Bank of Uganda will keep the central bank rate at 11.5% in May 2014. The band on the Cbr will be maintained at plus minus 2 percentage points on the Cbr, and the margin on the rediscount rate at 3 percentage points on the Cbr. The rediscount rate and the bank rate for May 2014 will therefore remain at 14.5% and 15.5% respectively.